Okay then folks, what I want to do is I just want to talk about a particular trade that several of the traders managed to take this morning. It was a good trade. It was an awkward trade, but it was a good trade. In the analysis video that I put together this morning, I explained the potential of this particular the potential of this particular trade, how we could play the trade, and I've had several discussions with you traders, with several traders prior to taking this particular trade. We were all online having a chat about this, and we had a great chat, and different people took different entries on this particular trade, which is great. You know, when new traders come on to me and they they're looking for some advice, they're looking for ways of which to become consistent in the market. One thing I always do with any particular trader is always take them back to the basics. I don't really care how long you've been trading. I always think it's helpful to go back to basics, and for you basically just to listen what I've got to say, and listen to the way in which I see that the market moves. And if you trust me on that, then generally you'll get on extremely well once you understand that the market works in a very simple and a very simplistic way. Because you've got to keep trading simple. If you don't keep it simple and you try to complicate things, then you are going to fail as a trader. And it's great to see, when traders come online and they want some advice from me, and it's great when they start listening to what I've got to say. As I say, I always introduce them to the basics of trading first of all. I think it's very important. And then the psychology, I will help you as much as I can with, but that generally is up to you. If you listen to what I'm going to tell you and listen to what I'm telling you, then it's a much easier process, and you can become a consistent trader. And as I say, it's fantastic to see when traders do listen, and we can talk about trades, and it's pretty obvious that traders are listening to what you've got to say because they're on the same wavelength as you, and they start taking some of the trades that I take. They know my entries, they know what I look for, they don't need to ask me these questions, and they're taking some safe and good equity management trades. So it's great to see, and congratulations to those traders that took this trade this morning. So as I say in the analysis video, what we were talking about this morning, we were talking about this particular uptrend line. This was our trading trend line right here, and we were talking about this area right here, and we're saying that this is going to be the battleground here. Once we've got a break of this area, this particular area right here, what we can do is we can look to take a short trade. Just remember that it is a counter trend trade, and what you're doing is you're trading against the trend on the euro. As we're looking at this one, this is the 5-minute euro. The current trend is up, and if you trade against that, what you're doing, you're swimming against the current, and more often than not the current is just going to sweep you away. So generally what I like to look at when I'm looking at trading against the trend is I tend to like more than one indication, okay, that we've got a potential trend reversal. So this was our uptrend line. What I was looking for a break of that uptrend line and a break of this particular low point right here. So I was looking for a break of this uptrend line, and then what I wanted to see is break this low. Now once we've done that, the second thing I'm now going to look for is I'm going to look for the market to retrace, because we've scored a point. Very, very simple. A game between bulls and bears. For the bulls to stay in control, they have to score higher points, make higher highs. If the bears are going to take control, then they've got to take out the last low, and we've now got to start scoring lower lows. So score a point. So this is the score the point. Then what I'm waiting for now is I'm waiting for a good equity management entry, and generally what I'm waiting for is a retracement. Now one of the traders entered at this point right here, because what we've got, previous support becomes resistance, and what that trader was expecting a bounce off the 38.2 if you pulled your Fibonacci's. Good enough entry in my mind, but what it does leave you in this occasion, remember counter trend trading, it leaves you with a large stop loss, because you're going to place your stop at least 5 pips above the last high. So in my mind that was a little bit too big a stop for me. So what I waited for, quite simply, was I waited for a 61.8 retracement. Now if you can get a 61.8 retracement or the back of this trend line for your entry, all the better, because once again 5 pips above the stop, what you've done now is you've got a much better equity management entry. You've broken this long-term trend line, so it's broken the trend line. It's telling you potentially we're going to change, you know, direction here. We're going to have a trend reversal. Broken the low point. Have we got another entry? Yes, we have. Now, I know quite often what I'll say to you is, look, once we've broken the trend line, a full body candlestick below that trend line, you could have entered right there. Yes, you could have done. But remember, you counter trend trading. Let's have a look at just a scenario here. Let's say that we've got this nice trend right here. This is the nice trend. We've got the score a point pullback. And what I would generally do is draw my downtrend line right here, wait for a full body break, just sorry about that, wait for a full body break above that trend line, then I would enter this long. Now that's fine, you don't need to wait for anything else because you're trading in the direction of the trend. So you don't need to wait for any more confirmations. All you need to wait for is you need to wait for that break of the trend line and then off you go. So that's what you can do, that's how you can trade. But when you counter trend trading, I prefer to get more than one. So just this full body break here below was not the entry that I was looking for. I wanted this low to be taken out. So now the bulls have potentially lost control because it's just taken out a low. Now I'm going to wait for my retracement because I want to get my best entry. As I say, a couple of you traders took the 38.2 bounce, but a couple did wait for the 61.8. This is where I entered right here at the 61.8, and it was close enough to the back of this trend line as well. And what I've done now is I've reduced my stop loss to that particular value right there. Now, great, we saw this trade then move, it took off, that was great, we were all happy, we were all doing a little bit of a pip dance there, you know, great, and then all of a sudden, whoa, starts reversing on us, comes back to test the back of this trend line again. We're all at this point steel shorts, we're all wearing the steel shorts or changing as underwear. Came back to test again, and what did it do? It started to fall, started to make the lower lows, and then eventually took the fall, and we had a great trade. So this was a great trade. Congratulations for those of you that were patient. Well done. Congratulations for those that waited for those entries. Even if you entered at the 38.2, previous support becomes resistance. Still a good trade, but a little bit of a large equity stop for me. Equity management comes into play, so it wasn't quite the right entry this time round, this time only. It wasn't quite the entry for me. I waited for the 61.8, and if you hadn't got there and it had taken off, then fair dues. You know, there's always another trade. But keep your trading simple. Let's not complicate things here, you know. And this is all I can continue to say to you guys. Just keep it simple. But congratulations to those traders today that took that trade. And especially those of you that had the nerve to hold on and hold on. You see, at the end of the day, you planned your trade and you traded your plan. This was your stop up here, above this high. 5 pips, at least 5 pips above the high, and you stayed in that trade. I mean, just look at this. This came to within a few pips of stopping us all out. But congratulations to those of you that held on there. You believed in what you were looking at. You planned your trade and you traded your plan. Folks, if there's anything I can help you with, please feel free to contact me. Thank you very much.